live in interesting times. That is actually a Chinese curse, and that is because interesting generally means huge upheaval. So today we're going to try and help guide you and your investments through the current upheaval. So welcome to the Old Mutual Investment Group webinar. I'm your moderator, Maya Fisher-French, and today I am joined by Jason Swartz, who is Portfolio Manager at Old Mutual Investments Group, and Meryl Pick, who is Head of Equities Research, but Meryl is also Head of the Old Mutual Gold Fund, something I'm just mentioning because gold has had such an unbelievable run recently. We may want to unpack that. I just do want to give apologies for Sibonisa Nxumalo, who unfortunately could not be here today. But welcome to both of you, and before we start, I actually want to pause for a moment and just acknowledge this incredible, momentous occasion in South Africa, 30 years into our democracy, and democracy is still working. And I think while we may all feel very uncertain about what's unfolding in the coalition talks and all the rest of it, I feel today proud to be South African. Meryl?
Yeah, 100% agree, Maya. If we zoom out and take that perspective, potentially one of the worst case scenarios would be a contested election result. And we haven't seen that. We've actually seen a graceful acceptance of the result by the majority party. And I think that it just reaffirms the tradition maybe we've had as South Africans of surprising positively. Mandela promised back in '94 to serve only one term and step down, defying that stereotype of an African dictatorship. He did exactly that, and we seem to be continuing with upholding our democracy.
Yet we all sit on tender hooks as these coalition talks continue. I was just listening on the radio today. Again, everybody has a different view and a different opinion on how this should all unfold. But maybe just dial it back a little bit, Jason, to the results. You know, there were polls, most people knew the ANC was going to be below 50%. There were some polls that showed it as low as 40%, but not many people expected the rise of the MK. How did this come as much of a surprise to you in terms of, I imagine you're looking at your forecasts, your investments. How did this election result strike you?
It definitely was a surprise, and there were different levels. As you say, you know, we were pretty much in line with the base case, where last year we were looking at national elections, ANC likely to get somewhere between 45 and 50, just looking for a couple of minority parties to get over 50%. And then it kind of tracked down towards 40% as the MK emerged, and, you know, the markets kind of sold off and worried about kind of a populist shift. And then as the ANC election campaign rolled through and red carpets and food parcels and surprisingly no load shedding, you know, that kind of got the ANC back up to 44, 45. And that's kind of where we were before the election. So I wouldn't say that 40% was outside of our range of expectations, but the remarkable surprise was the MK party's numbers of 14.5. And whether that was, you know, because of allegiance to Zuma or Zulu nationalism. We were talking a lot about Zulu nationalism before, but we never expected, you know, this type of support. And that really threw us. And it was a lesson just in terms of humility around polls and just understanding or knowing that the MK party, we really need to understand them. They're a legitimate player in the political landscape. And you need to understand what their risks are and priorities and, you know, take it from there.
Well, let's maybe unpack how the market responded to this. So what kind of has happened in the market in the last week or two? Meryl, maybe you just want to start with that.
Yeah, so, I mean, Jason can comment on bond yields. I think what we've seen is volatility, not unexpected. We've seen initially Rand strength, just post the election, some weakening into the election, and it seemed to be correlated by the extent of the ANC's loss. When it was closer to 40, the Rand was weaker. When it was closer to 45, the Rand was a bit stronger.
And let me unpack that a little bit. I think that is certainty. Markets don't like uncertainty, do they? They want to know what's happening. Even if it's good or bad, it doesn't matter. It's certainty. Do you think that's why we saw the Rand move like that?
Perhaps what one could read through, if we had a 45% or above result for the ANC, they could have stayed in a quasi-majority scenario by cobbling together that 50 plus 1 with a handful of smaller parties. And what that does give you is some certainty. We've known the ANC, we've seen how they've governed. Question marks about whether that's actually delivered great economic results either way, but I suppose the market is familiar with that and perhaps would have known what to expect. So yes, below 45 and closer to 40, it does throw the scenarios open quite a lot. So I think we've seen the Rand being that barometer of sentiment. And similarly, the banks, the consumer-facing shares, so the real SA-facing shares have moved with the Rand. As the results started to come in, surprisingly, as they were close to 40%, the banks and consumer-facing shares were quite strong. The Rand also was quite strong. Now, that might have more to do with the dollar weakness than Rand strength. I think perhaps what was also starting to surface was this idea of, wow, is the loss so big that now cooperating with the DA has to be considered, you know, and that has been touted as the more market-friendly option. So I think when we see a bit of relief in the banks, my view is people are then starting to price in a DA tie-up, and we've seen a weakening in the last few days as reality dawns that there's a lot of complexity that needs to be considered.
And you mentioned a barometer, bonds. The bond yield's obviously another big barometer for South Africa. What have the bond yields been doing?
So similarly, as the results came out and the ANC was close to 40%, bond yields sold off. And that, you know, as Meryl said, you know, the scenarios then, the permutations widen, and uncertainty, as you mentioned, Maya, you know, it builds in a certain risk premium that just causes prices to drift lower because you need that risk premium to compensate investors. So generally bonds have kind of struggled. There was a little bit of a news cycle over the weekend that perhaps there's a preference towards a DA or Grand coalition. And at the back of that, you saw a little bit of a relief rally this last couple of days. But that changes every day. So there's going to be a bit of a noisy couple of weeks. You know, we prefer to kind of step back from that noise. Obviously, if there are tactical opportunities, you want to take advantage of it. But the key for us is really just what the scenarios mean in terms of policy implications. And that's really what we want to try and do in terms of building a portfolio.
And I think that's what we really want to unpack a little bit today. What are those different scenarios going to mean for markets and for investments? But before we get there, let's spend a little bit of time understanding the coalition options. We are not the only country in the world that's going to have a coalition government. In fact, it's quite common throughout the world. And it's maybe something we need to get used to and could be very much the face of South Africa moving forward, and perhaps a healthier balance of power going forward. I mean, Meryl, maybe you want to start with that one?
Yeah, so I think the idea of a coalition era is scary to us as South Africans because it's new. You know, in the era of certainly the new South Africa and democracy, it is new to us. We've known ANC hegemony, but if you look at certain emerging markets, even Canada, most European countries, in fact, are governed by coalitions. They've probably got laws and policies around that to make these coalitions quite stable. So that's probably something that South Africa would need to put in place going forward. But if you take India, for example, the Indian, not the ANC, the INC, Indian National Congress, Gandhi's party that led their liberation movement, was a majority party and a majority government for a long time until they lost power in the 70s. And subsequently, they've played a strong role in every election going forward, even coming back into majority at times. But broadly speaking, for the last 50 years or so, India has been led by some kind of coalition. The same for Turkey, the same for Brazil. So we are not the first country to mature from a liberation movement into a governing party with majority into a coalition state. We just need to figure out the rules.
And I must just give you a little anecdote. I was in Johannesburg on Tuesday, and I was at the Balalaika Hotel, and I was sitting in the lobby working. And next thing is the DA negotiating team walked in and sat on the table over there. And I was like, "Oh, I need a microphone to stick under the table." But they were looking reasonably confident. We have said that the market seems to prefer some kind of DA involvement in this, but maybe we should unpack a little bit all the different options, because we actually don't just have, there's so many things. I mean, first of all, you've got different tie-ups of which parties will tie up. You know, will it be an ANC, DA, IFP? Will it be ANC, EFF? It doesn't look like MK's in the room. They don't want to have any discussions with the ANC. But there's also within that there's this confidence and supply. There's a government of coalition. Perhaps we can unpack that a little bit, Jason?
Sure. Let's start with the ANC-DA kind of grand coalition, which has become quite topical. And I think for all its challenges, it's really a plausible outcome, because there are, quite a few Cyril Ramaphosa allies that have a vested interest in him sticking around and transitioning in his own time. A lot of the NEC, could be supportive towards the DA just because, they don't want the party to go on a path of becoming a regional rural party. And you've seen some of the economic performance, and some of the conditions of the EFF and MK initially were quite high. So it can definitely happen. I think the challenge is that the DA and ANC have always fundamentally been ideological adversaries for years and years. So how do you deal with difficult issues like NHI and minimum wage and black economic empowerment? I think we were chatting about this earlier. The shape of that coalition is also important. So whether it's confidence and supply, whether the ANC, I think, really wants to control policy. So they want to be in the executive. The DA is happy to have parliament and have some committee memberships. The speakership, I heard an interesting story that the speakership could actually go to an IFP person, because that could be a nod to kind of the Zulu nationalism. It could kind of protect the ANC around the DA being quite hard on corruption. So like lots of different permutations, both around, the coalition as well as the shape of that coalition. The market will definitely appreciate or price that in as positive, because the DA will go hard on growth and on fiscal challenges. I think the other coalition that other combination we have to talk about is the ANC and EFF. And that also doesn't have to be a doomsday scenario. Julius Malema, who's a really astute politician, has said that they're happy to have concessions around Cyril Ramaphosa being president, not wanting the finance ministry, waiting about expropriation of land without compensation. Those are, difficult concessions to make. And so they've become a little bit pragmatic. I think the market at face value will not be happy with that type of outcome, because they are worried about more populist and more radical policies. But yeah, I think those are the two main outcomes. They don't have to be binary. The ANC just recently said they prefer a coalition with both the DA and EFF in, but that's a bit of a red line for the DA. So it's a little bit of a wait and see approach, and really just understanding, what are the priorities of all these parties? How, who has the executive, who has key committee memberships, and who's the Speaker of Parliament. I think the Speaker of Parliament is really important, because we've never really tested the boundaries, constitutional boundaries of what the speakership's power has been. Always, Meryl made that point earlier, it's always been the ANC. So how do we hold that government an account, and how does the ANC continue its priorities around, equality and growth and jobs?
Meryl, maybe you can help me a little bit understand the confidence and supply, this new terminology we're all hearing about. And how can that come to bear also perhaps on corruption? Because I think corruption has to be the biggest issue that we're all facing. I mean, policy is aside, our country is stuck in this low growth scenario because of corruption.
Yeah, so if we start with growth and what is holding growth back, there are factors that we can control as a country and those that we can't. We clearly can't control the global economy and what happens with our trading partners, but we can control our rail infrastructure, we can control our power generation capacity and our grid. So we know that GDP has been held back because of load shedding, and then in more recent years by rail infrastructure. We did not benefit from the commodity boom to the extent that we should have because of our inability to export. And you can draw a line then between those SOE performances and corruption, right? That misallocation of funds that is meant to be going to maintaining these key national assets, perhaps finding its way elsewhere. So I think tackling corruption should be within our control, and tackling that, if it then unlocks SOE capacity and restores SOE capacity, can unlock growth, whether the global macro is weak or not. We're under potential. So I think what we haven't seen up to now is really the true relationship between the Parliament and the executive, and we can, I think Jason alluded to that, so we can get back to that. But to answer your question on confidence and supply, so coalition governments, as we said, are not unique to South Africa. This is a global phenomenon. And when you are in a minority coalition, which the ANC now will be going into, at any point in time, you're vulnerable to a vote of no confidence in Parliament. A confidence and supply agreement is an agreement to have a voting bloc that protects the ruling party and the president, the minority ruling party, in the event of a motion of no confidence. So, for example, the ANC and DA, perhaps the IFP, agreeing that should there ever be a vote of no confidence against a president, for example, Cyril Ramaphosa, that he would be supported in that vote. The supply part refers to voting in favor of the budget. So again, not going into a parliamentary vote, not knowing the outcome. Obviously, that means the parties involved in that agreement would have a lot of say into the budget before it gets tabled, but knowing that once it's tabled, you've got support to pass it through Parliament. Without that majority support from a voting bloc, Parliament becomes very unstable and unproductive.
And just, I wanted to go back to that point about Parliament being separate from the executive as something we've never seen before, because of course you just told Parliament, you just told your MPs how to vote, they voted and it went through. Now there's going to be real debate.
Yes.
And is that I mean, that must be healthy or disruptive, which way we look at it.
I think it will be disruptive. It will be, it will feel inefficient, but I think that is part of the health of it, because it can be efficient and unhealthy to steamroll things through Parliament. We've seen that, if you had a 2/3 majority, you can just make a Nkandla investigation disappear. You can pass an NHI bill, you can pass an expropriation bill very efficiently, but you can efficiently do the wrong things. So it is designed for Parliament to be an oversight to the executive. But the analogy I use is before King 3 and all these governance rules, you'd have an executive CEO, executive chairman, where I am the CEO and the chairman, and I rubber stamp my own decisions. Whereas we've moved in the corporate landscape to an independent board, an independent chairman especially, overseeing the actions of an executive and a CEO. So what we've had in SA Inc. has been, the board of directors has been ANC, the EXCO has been ANC, and the ANC is presenting to the ANC, and the ANC is approving the ANC. So what we're going to have now is perhaps a lot more independence coming through at the board level, parliamentary level, depending on the permutations, and overseeing probably still a majority, if not exclusive, ANC executive, but a lot more accountability than we've had before.
Okay, that sounds like a good thing, but how is the market, Jason, going to respond in the short term? Do you think that the minute a decision is made, the market's going to say, well, at least we have certainty now and everything will be fine, or is it going to have some very severe movements depending on what that outcome is?
I think optically, without going into the detail, the market could either rally or sell off quite violently And that'll just be noise, I think.
Choose which one.
So you really need to think about tail risks. You know, for us, you know, if the market understands that, you know, as Metal says, there's accountability, there's stability, there's shared responsibility. It doesn't really matter, you know, so much about who the coalition partners are, as long as, you know, I think we tick the boxes on a couple of policies that, you know, growth is restored, you know, through energy and logistics constraints. Our fiscal challenges are looked at. And then I guess more the social side, you know, unemployment and jobs are created and we have better equality. So, you know, the market can be a little bit fickle and can just look at kind of the headlines, you know, what are the party names without understanding, you know, what concessions and where, you know, where they've kind of negotiated on, you know, who's got what seats and what the policy implications are.
It's going to take time for everyone, I think,
Absolutely.
to understand the consequences.
Absolutely.
So I have just realized that I never mentioned up front to our viewers out there that you are more than welcome to post questions on the question tab there. Please do, and we will definitely be getting to them at the end of this panel discussion. So please start sending your questions through, because I'm sure you've got many, many, many burning questions. And one of the burning questions that I suspect is out there on this note is social unrest. We've been very fortunate so far. We haven't seen any unrest. We've heard threats, but we haven't seen anything. If there is, you know, when they announce the coalitions, there is a Pacific Party that feels very left out, and we know who we're talking about here because they're already upset and angry. If the MK gets, you know, violent, is that a possibility, and what would the market reaction be to that? Who wants to take that one?
It'll absolutely be negative. I think if you looked at what happened in July 2021 with those riots, you know, luckily we haven't seen any signs of a January 6th type event with the US elections or ZANU-PF example, where the ANC, you know, is happy to hand over power. But you know, there still is some threat. I think KZN specifically is a little bit of a tinderbox in terms of that could just ignite depending on what happens there. And I think the safer strategy could be that the MK, you know, needs to, it's difficult to undermine them, KZN specifically. I'm not sure about nationally, just because, you know, I think, you know, their demands might just be very high. But this far, it seems like, you know, the risk is quite limited of any violent unrest. You know, if that did happen, you know, I would hope that, you know, it is quite shallow, it is quite short-lived. The market reaction would be quite aggressive, but I think there's probably a very small probability of that happening.
Meryl, going back to Jason's comments about the volatility, and we're going to have volatility one way or the other. Something, it's either going to be up or it's going to be down, but we're not going to just, it's not going to be business as usual over the next couple of weeks. But this is not unusual. This has happened before, and I'm not just talking 94 elections, but if you think of something like Nene-gate, how does the current situation compare to some of those kind of high volatility moments in South Africa?
Sure. I mean, we are an emerging market. I think we must not forget that. And emerging markets come with tumultuous times. We're seeing that play out now in India's election. We've seen big civil action in Brazil a few years ago, you know, and same with Turkey. So South Africa is an emerging market, and these kinds of things happen. You know, we've seen so many events, be they global or local, since the 60s, since the 70s. If you look at the market performance, however, through that period, for example, if you just look at the JSE performance from 1975 to date, if you hadn't read the news and you just had invested your money and gone away for 40, 50 years, your return on an annualized basis would have been 12.5%. Now that might sound surprising, knowing that if you'd started that investment in 1975, well, we know what happened in 1976. We know what we lived through in the 80s, you know, in the early 90s, etc. So a while ago, I was reading some of the retailer reports, Edcon, the Foschini Group, etc. from 1993, April. Chris Hani had just been shot, you know, and who would have guessed that a year later we would have been through elected the first democratic president. And from then, if you looked at how these companies actually performed, well, there were consumers to serve, and they performed well. So I think the market is a reflection of the ingenuity of South African businesses who are used to thriving through probably even worse times than these. You know, the one anecdote that the financial director of Foschini gave me back in 2015 was leading into the 76 riots, their management team sat back and said, number one, we're committed to South Africa. Number two, this is the cheapest leases we're ever going to get. Let's go and sign. Let's go and sign up. Let's do a land grab.
One way of looking at it.
This is the cheapest that rent is ever going to be. We're planting flags now because we're here for the long run. And we've seen companies like ShopRite, etc., navigate the riots, you know, just with a high degree of controlling what they can control. And then, of course, let's not forget that the JSE is not South Africa, because at least 50% of it now actually represents these multinational companies that in many instances were started by South Africans, like the Richemont Group, you know, British American Tobacco, through SAB being exposing South Africans to Anheuser-Busch, and the list goes on, NASPER's process. So only about 50% of the JSE is directly exposed to South Africa.
And I mean, you're going back to the long-term views, right? And Jason, I want to ask you, you know, how is this going to impact the house view on the long term? And I know because in the long term, it's all about economic growth.
Yeah.
And that is a big question mark in South Africa right at the moment.
Yeah, for us, you know, thinking about what potential growth in South Africa is, you know, we want to lift it above 1%. We want to get to 2.5%. And that can really only happen. You've seen small incremental changes around Eskom. You've seen because of their deep maintenance that unplanned outages have kind of slowed down. You've seen better kind of vessels and port data come through. So that's really where we need to focus on in terms of that long-term growth story, because, you know, South African assets are very cheap, but you really need that catalyst to unlock that value. And those are the kind of, you know, events that we want to see. You know, you want to see growth enhancing reforms. You want to see some sort of discipline around fiscal spending. And for us, you know, that is really, in terms of the long-term view, what drives our allocation between South Africa and global opportunities. So we're starting to really see that happen in terms of this government and how that, you know, we just have to see some of the detail around, you know, what are we going to do with Treasury? What's going to happen with the finance minister? Is central bank going to be independent? Is that policy going to be orthodox? What is going to happen with fiscal consolidation program that we've been committed to? So those are all the types of information that we're going to use to inform our view around long term. Currently, it has been very anemic and a little bit disappointing. And we've kind of embedded that into our views and contrasted that with valuation. But for those to unlock, we really want to see some of those reforms accelerate in terms of the pace of them.
And as you were talking about, you know, making sure that you still got the independence of the Reserve Bank, you know, if you think of things like the EFF, who's called for it not to be independent, and the fear around that coalition agreement undermining some of those really important roles and of Treasury, SARS, all those things. But Meryl, I was thinking about a conversation you and I were having before we actually started. You were saying, you know, often people come into leadership roles with radical ideas, but they quite quickly conform. And I was even thinking about Trevor Manuel. You know, I remember when he came in and the markets went absolutely, they collapsed and everyone, the rand blew out. And yet, you know, he actually was probably one of the best finance ministers in the world. I think he's still rated as one of the best. So somewhere along the line, sometimes people do have to acknowledge and maybe it's just there's some difference between electioneering and actually reality of running a government.
Absolutely. I think we saw that even with the ANC in the 90s, which, you know, is probably controversial and might upset some parts of its electorate, but it is true that the ideas were more radical before actually coming into party, into government, and realizing the realities and the complexities of governing an open market country in a broadly speaking, a free market capitalist global economy, comes with certain realities and trade-offs. So I think we've seen an example of that before. Outside of South Africa, we've seen, for example, the Greek elections, I think in 2012, I think I'll pronounce it incorrectly, but Tsipras campaigned on a very anti-austerity election, set of promises. When he actually came into power, needed a bailout from the Eurozone, from the IMF, had to completely do a 180 and actually run a very tight program of austerity despite what was promised to voters. So I think, as Jason had said already, pre-election, the EFF was quite vehement. They want the finance ministry. They don't want Ramaphosa in power. And now that the negotiations are actually happening, we're seeing many of those stances softening. So how can we read through that into what actually happens to policy, and what will ultimately get presented to Parliament?
Jason, what do we need? What policy do we need to change? What do we need to change to break out of the low growth environment we're currently sitting in? What do you want to see happen?
Yeah, as I mentioned, a huge constraint around economic growth is just being able to benefit from the commodity cycle. Meryl kind of touched on it earlier, and just the ability to get raw materials out the ground, get them to ports and get them to countries that are importing them, just not having that ability. So I think the Transnet problem is probably the biggest campaign or the biggest policy headache of government at the moment. And if that's the one thing that I think we could fix, and that would turn our growth from being pedestrian at 1% to 2.5%. There was an estimate that because of some of the logistics challenges on the rail network, of 2022 and 2023, GDP lost 5-6%. So just that would be, some of the low-hanging fruit that we can immediately kind of tick off, and will put South Africa on a different trajectory. And I think that should be a policy priority of whatever the coalition governments are. Obviously, some of them have different priorities. Some of them want to be, more focused on equality and kind of creating this welfare state. But for me, tackling, kind of the logistical constraints is the number one priority we should have for us to, get to a better long-term growth trajectory.
So we've got all our viewers out there who are all wondering right now, what do I do with my money? And I want you to tell them what to do with their money, both in the short term. Right now, I'm uncertain. I don't know what's going to happen in the next 10 days. How much time have we got left?
Till the 18th of June.
18th of June. What do we do? Do we just cash in everything and stick it under our mattress? And then also, just how does one position generally a portfolio in uncertain times?
Yeah, I can start. I mean, I think it's an illusion to think you're ever not in uncertain times.
That's a good point.
I think that's the one point I would make. It's easy to look back at these charts and say, 12.5% since...
Oh, it sounds great in hindsight. I wish we could all have the charts in hindsight.
Yeah, since 1975. But how was an investor feeling in 1976 when the market had just sold off 20-30%? And yet, in hindsight, those were some of the best...
buying opportunities.
Absolutely. So... you could have thought you were in certain times, and then there was COVID. Then there was a Russia invasion of Ukraine. Then there was Israeli invasion of Gaza. So, sorry, the other way around. So I think certainty is an illusion, and so the one thing is you have to stay invested. You certainly have to diversify. South Africa is an emerging market. Jason can talk to offshore versus local allocation. Investors do have more options, but I think point number one is to stay invested. Definitely the mattress is not the right answer.
Not in the current inflation rate, no.
No, and I think the way we've positioned certainly the domestic facing portfolios has illustrated some humility that we actually do not know how these elections are going to go. Therefore, the implications on the rand are difficult to call. So we have diversified. We've picked companies that we think have macro-proof, election-proof strategies where they are the leaders in their sector, they are gaining market share, they have competitive edge or competitive strategies, they've got healthy balance sheets, they've got strong management teams. And then we've added things like gold to the portfolio. So in a scenario where the rand weakens significantly, the likes of Harmony Gold benefit in that scenario because they're selling a dollar-based commodity. At the same time, we do have exposure to South African banks because we see value there and we think they're well run and well capitalized. So we have actually just not strongly positioned as though we knew how these elections would go. We've expected volatility and we still expect volatility to continue.
You expect to live in interesting times. Jason,
Certainly.
you want to add to that?
Absolutely aligned. We have been, fairly cautious going into this year. More of it was informed by, quite a fragile global environment. But, Middle's right, you need humility. There's so many surprises. If you look back at a year and what the key driver of that year was, typically it's something that surprised the market. So, for us, we've been pretty neutral SA equities from an asset allocation perspective. It's been a tough operating environment and there's been some valuation support and that earnings base is quite diverse and low. So our key driver has been in nominal bonds. So we really we think that the real yields compensate investors for some of the risks, the fiscal risk, inflation risk. So that's been one of our key ways to create a portfolio that's really giving you a lot of defensiveness, a lot of yield. We have been kind of neutral global bonds. We still think that there's some disinflation in the system, but there's quite a lot of fiscal and supply versus demand dynamics there. And our other call was kind of being underweight global equity just because of valuations and pricing in, quite a strong kind of profitability story. So as a portfolio, fairly cautious, not outwardly defensive. We want to, for example, for elections, we've been doing a lot of optionality. So taking out currency hedges just in case we have a blowout. In some portfolios, depending on the mandate, we've actually put in structures where that can benefit from the rand just in case we have a positive election outcome. Because as you say that, this could be, it could be quite binary and you want to be prepared. We don't have a very high conviction base case view, but we think that the tails could come up and kind of drive the portfolio. So from that perspective, you really want to think about, hedging your scenarios in case, you have the surprise that creates, that's very unexpected and it drives your portfolio. So you want to protect portfolios against that type of events.
And I think it's also important to note that politics actually plays a lot smaller role in market outcomes actually than global events, and especially things like inflation, interest rate cuts. If suddenly you start having, if the US starts cutting rates, that's positive for South African rand. So there's a lot more going on, and I think as South Africans, we often get caught up in our own stuff without realizing we're a very, very, very small player in this really big world, and the money is moving for all very, very different reasons. So I think one also has to take cognizance of that. There are all these other events that have an implication. Meryl, do you want to comment on that?
100% right. I mean, the Fed has been, whether we see the first rate cut this year or next year, the next move is most probably down, although you can never say never. So, and the Reserve Bank locally has been waiting for that cut. So I think a Fed cut is interesting in two ways. Number one, it probably weakens the dollar, which then strengthens the rand, which is good for some of the, like the banks, for example, but also good for our local inflation numbers. With our growth profile being what it is, the Reserve Bank probably could have cut rates already, but out of wanting to protect the rand, most likely have been waiting for the Fed to cut. So probably within the next 12 months, South Africa could get that rate cut, which then is a relief to consumers, regardless of what is happening with policy. And I think the one thing we can probably guarantee is that anything that happens with policy will be slow. It will be slow. Whereas a rate cut impacts consumers immediately. And then, we've seen some of the consumer names, Mr. Price, TFG, Truworths, well-run businesses becoming cheaper in the last 2 weeks.
And they have obviously a buying opportunity if rates get cut, because people still go to the shops and they still exist. As I pointed out, as you point out, not during COVID, obviously, but if I think back to the credit crisis, people still went to the shops and they still did their banking and all the rest. But sometimes it's important just to distill that out. If you walk down the streets today, you're not going to know there's huge coalition talks going on anywhere. So I think that is an important point. And before I go to the questions, I am going to put you on the spot quickly on gold, because so many people in South Africa are gold bugs. I was telling somebody in the US that every news bulletin ends with the gold price, and they were quite shocked. It must be a country in the world. It's rallied up absolutely massively. How are you seeing it? Are you seeing it still as something to keep in your portfolio, as a defensive play, a bit of protection, or are you thinking there's an opportunity to perhaps take a little bit of profits? How are you seeing it?
I think there's two components to it as a South African investor. There's the rand and the gold price. So the gold price itself, I think we're now somewhere around 45% up from the last trough, which was in September 2022. It troughed at $1,635 an ounce, and we're now, I think today, 2,340, something like that, which is really quite a phenomenal run, and I think is confounding mostly Western investors, because we've seen a lot of that demand actually coming from Eastern investors and from emerging market central banks like Turkey, China, Russia, Kazakhstan. So I think there's a bigger and longer term story at play, which has to do with the rise of China and Russia versus US strength, which superpowers are going to be dominant in the next, let's say, 30 years. So that's a very long-term positive underpin, I would say, for gold demand, because ultimately it's tied to the strength of the dollar and the dollar's status as the
world currency,
reserve currency, which does seem to be incrementally, ever so slowly, coming under pressure. So I think the phenomenon is that even as Western investors are taking money out of gold, we've seen gold strength.
Okay.
So at some point, if Western investors come back
you could give it an extra
into that market,
boost.
it could boost it even further. Then the rand component is interesting for South African investors, because gold companies are actually a pretty decent rand hedge, because they not only get the strength from the gold price, and the operating companies, the mining companies, get that leverage to the commodity price, but also to the rand, because they company like Harmony, their operating cost base is in rands, but they're earning in dollars. So that's a great equation when the rand is weakening. So I think it definitely holds a position in the portfolio. It's very uncorrelated to many other assets, which is great at that one moment that you need it, when everything else is melting down. Gold is at least standing still, if not melting up. That's why it's in the portfolio. It has had a strong run. I certainly, we have it in our portfolio still.
Still, there is a good insurance policy. I always think of gold as an insurance policy. I want to take some questions. Evan Fennell, what do you feel will happen to the country's economy and foreign investment if the ANC do a coalition with MK or EFF? So I think we dealt with that a little bit. I think we spoke a little bit about an EFF. We haven't really spoken about MK, because I think it seems so off the table. But Jason, do you want to make a comment to that?
Yeah, I think MK is probably a little bit on the outside of the room in terms of those negotiations that are happening. If there is a tie-up with MK and EFF, I think the global investors will probably be a little bit concerned around what that means in terms of do we get prescribed assets again? That I think there's almost zero tolerance for that type of policy. Do we have nationalization of mines? Do you have nationalization of the central bank? So all of those very radical, kind of populist, very far left policies will be seen as negative. So I think it's difficult to dress that up in another way. So that is the big risk for me in that type of tie-up, is that the market reaction, will be aggressively negative.
And, that is, I suppose, leads on to Martin Hesse's question, which I think, Martin, when judging from the time you posted this, we did go on to talk a little bit about longer term instability. But what are the next 5 years likely to look like? But I suppose that's, it's going to depend on the factors and policy decisions. I mean, how are you positioning for the long term? Diversification, some gold?
Yeah.
Jason?
Growth in South Africa and fiscal situation.
I think,
if I can just add to that, I think what we have to remember is that to change any policy and any law, any coalition has to get that policy through Parliament.
Exactly.
Which has just become a lot harder.
Exactly.
It's just become a lot harder.
NHI took how many years? Like 12 or something. It is eventually there, but
it's there. But if you look at the last budget, I think also
it's
sometimes it again goes to the electioneering on the one hand versus governance on the other hand, because there's a lot of campaigning around NHI. When you look at the actual budget allocation, it's quite small. That doesn't mean it doesn't have indirect implications. So if you are triggering nurses, doctors, etc., to immigrate, that actually achieves the opposite of NHI, which is less affordable healthcare, because wages in the health sector go up. So there are those nuances, but to change anything has just become a lot harder. So in all likelihood, what we see for the next 5 years is incremental, to be quite honest. And hopefully it's in the direction of what we've already been seeing, which is incremental improvements at Transnet and Eskom.
I was just about to say the same thing. I think we can't see any major, it will take forever for major changes to come about in such a coalition environment. It becomes even more difficult. Yeah. And I think I'm probably more of the thing that we don't need any more legislation. We just need to implement some of the legislation we already have. I think certainly that would be true. So this is more of a political question. So Mina Williams says, some of our politics is met with theatrics and less about the nitty-gritty of what needs to be done. Couldn't agree more. At least what is of public knowledge? Would you say the media is responsible for this? If so, how do we shift conversations to inspire young people to be involved in politics and not to be discouraged on the basis of what leaders do in power with their power? Maybe it's quite a political question for you guys, but I mean, is the media responsible for this? Well, I think the media responds to clickbait. Media responds to what stories you click on. So, I think as readers, one also needs to start saying, what kind of stories do we want to be reading, and then reward those. But, if you're putting up big headlines, scary headlines, and people click on it, it starts to drive clickbait. So that's just my comment from the media perspective.
I think the one thing we do all need to do is go and dust off those little constitution booklets that they were handing out when I was probably in high school, and read them and educate ourselves. Because I think we've taken a lot of things for granted about how South Africa actually works in theory, because we've just had this ANC majority. So we haven't actually had to understand the rules. I think that's one area that the public, including the young public, should dial up and take control of educating ourselves.
And I think that's such a powerful point. For the first time, we're really going to see true democracy. I remember I was studying economics, and they raised the point that South Africa was not actually a true democracy in its true sense, because we hadn't had a change in power within a certain period of time. And so we were actually, for the first time, true democracy,
We're
where
growing up.
we're growing up. And I think we should take that as a positive thing. Jason, do you want to add?
Absolutely. I mean, I think in any country where you've seen a mature democracy, there's years and years of pain and a lot of give and take and compromises. So I think we're probably in a period where we're going to see a lot of that, and people might be disappointed that what they want in terms of their priorities is not going to come through. I think that the ANC has a very difficult choice to make that they can't actually make in 2 weeks. Do they, as people say, do they sell out to the white monopoly capital, or do they, tie up with EFF, MK and continue this trajectory?
But aren't those labels all that problem? That's the political labels, right? That everything's been given, it's all binary, but it's not binary.
No,
Most of the
absolutely,
case, you actually probably aligned on many of policies.
And I think that's what they want. They want an inclusive government. They want to share responsibility. But you need, and unfortunately, negotiations are very fragile because there's no regulation governing them. So there's going to be lots of teething problems, and coming back to volatility, lots of volatility. So,
and just be careful, just maybe don't read the news headlines for a while. But I was thinking about the, now I've gone blank. Actually, there was a point you made now that I thought was a really important one. I'll have to swing back to that one on that now. But Sydney asks, what type of government have you priced into your valuation model? Government of national unity. I suppose he's asking the type of government. Like, do you have a feeling at the moment?
I think it comes down to the prior point is it's not so much about the type of government, it's what level of growth does that government achieve, and I think what we've priced in is pretty much the muddle along scenario, the 1 to 2%, perhaps a bit of a lift if there's more sustained improvement at Eskom and Transnet, because we do think we will muddle along as we find our way even through this new coalition phase. Quick change overnight is going to be difficult. So it's going to actually come down to the global economy, most probably.
Once again, waiting for the global economy to lift us. I remember the point I wanted to make, about policies and alignment of policies. I think there was a poll done this last week asking South Africans, what is the most important outcome for you? And they said, is it minimum wage? Is it NHI? And number one was corruption. Number one, but by like 80%. So what South Africans are asking for is an end to corruption. And what we need to see in whatever coalition's put together is a true belief that this coalition that's been put together will be able to curb corruption, release the funds into things like Transnet, into building the economy. And I think that's the outcome. Really, to be honest, all the other policy decisions and arguments that are going on underneath is actually almost irrelevant as curbing that corruption. Jason, do you want
I agree. If we can get a government that focuses, more on governance and anti-corruption as opposed to patronage, I think that'll go a long way. The DA is obviously a little bit at the forefront of that. And I think given certain NEC members may have been linked to corruption charges, I think that becomes a difficult then issue. How do they form a coalition if, the speaker or someone in DA is going to hold them to account like very strictly. And it is frustrating, and I think it's the legacy that we've grown up with. And I think it's probably optimistic for that, not for us to create a clean government in any time soon. But I definitely sympathize with, what you said, that is it's a very frustrating part about governance in South Africa.
Well, I think unless anyone's sending any more questions through, we're probably going to start wrapping up. Is there any other last comments you want to make?
Yeah, I think if you piece through the various party manifestos, they all are talking about some form of growth, some mechanism to give ordinary South Africans jobs, both of which, however way you get there, is good for markets if they actually execute what they say in a context of clean governance, right? Because I think even the three, EFF, DA, ANC, they would all be talking about that, How do we create jobs? How do we stimulate growth? They all are talking about social grants and welfare, just to varying degrees. Who gets them? How many people get them? What is the size of it? And I think what we've seen is that even for the ANC to sustain the level of welfare that we have cannot actually be done without sustained growth.
Exactly.
So I think there's perhaps more agreement than we think.
I just want to pick up on something I think you mentioned around, behaviorally. I think we've obviously got this urge when there's volatility to de-risk and kind of get out the market. I think Meryl maybe also mentioned it, but I think that's often, the wrong strategy, and people shouldn't think that they're mitigating risk, but in reality, they could make a very poor timing decision and miss out on the market running. So I would say kind of stay invested, have a plan, diversify your portfolio, and make sure that you don't have any knee reactions to any short-term noise, and just focus on, the long-term and diversification.
I mean, I want to thank both of you, because I think for me, speaking to you, and we also spoke a little bit before we came on air, it just gave me a sense of moderation. It gave me a sense that, we'll muddle through this. We always manage to muddle through this. This is not Armageddon. It's not the end of the world. We'll figure this out. But sadly, I think we are muddling. I don't see any sort of grand thing that's going to suddenly overnight transform us. So your portfolios need to reflect that. You need to see where the opportunities lie in South Africa, where the value is, what opportunities there may be there, diversify, have your gold, and just really approach this sensibly, but just not overreact and try and be clever about anything. I think that's probably the overriding thing. And I think, we're going to look back upon this time and think, oh gosh, yes, remember, but look where we are now. Yeah. I think that's probably my overall feeling that I've had by the end of today. So I want to say thank you to both of you, and thank you to all of you listening. And I'm sure you want to be glued to the media, but maybe be careful which headlines you click on.